Hello friends, hello professionals, and welcome to my channel, The Sea of Regulation. My name is Simone Martin, and this channel is dedicated to making things about financial services regulation a bit more user-friendly, a bit more understandable for the general public, or even if you're a veteran in financial services. And in today's video, I'm going to be looking at what exactly is a risk assessment. But it's the basics. Now, before I dive in, let me get my usual disclaimers out of the way. I am a financial services regulator. I am not a lawyer, and I'm not a professional advisor. And the views on this channel are definitely all my own and do not reflect the views of any regulatory authority or international standard-setting organization. So with that out of the way, let's dive in. So we're going to be looking at what exactly is a risk assessment. Now, people tend to make this a little more complex than it needs to be. And is it complex? Yeah, it can be. But we do risk assessments every single day without even thinking about it. It's cloudy outside, in fact it's raining, and there's lightning and thunder, and it's just raining. Are you going to take the risk of getting wet, or are you going to use an umbrella or a raincoat or boots? You're going to do a risk assessment of what part of you is going to be soaked in a downpour and take actions to mitigate against that risk. Now, in financial services regulation, risk assessments are exactly that. You're looking at the risk of something happening that would allow money laundering, terrorist financing, proliferation financing to occur through your firm or through your organization without being properly detected, reported, and stopping criminals and other bad actors from getting through with their bad intentions. So again, why a risk assessment, and what is a risk assessment framework? Well, a framework basically allows you to map out all of the risks that are inherent to your business and address those risks from a perspective of what's the probability. So if I walk out into noonday traffic without looking left or right, the probability is pretty high that I might get run down. And I don't want to do that. So I'm going to take precautions. If a particular risk of, say, someone using your bank to launder money is pretty high, you're going to take measures to mitigate against that risk. But there are different risks that can occur. Now, the risk assessment framework looks at the probability of these risks as well as the impact. So what's the impact or the harm or your firm's sensitivity to that particular risk? And would that risk occurring be a firm-ending event? For example, a cyber attack. If you have a cyber attack that happens against your firm and all of your data is gone or all of your money is gone or something like that, that means the business may not be able to continue. So a risk like that, you would want to take all measures to prevent at your best effort. And so a risk assessment framework looks at all of the different risks that are inherent to your business and consider what you should have in place to prevent those things from happening. Now, let's have a bit of a case study. We have a bad actor. They are in a nice island or a port city. So we're looking at a Miami. We could be looking at Cornwall. We could be looking at somewhere in Greece, somewhere in Denmark, somewhere where you have a body of water, beautiful places in Australia, and you have an individual. That individual buys a boat, incorporates a company, opens a bank account, and they do all three of these things. And all of these things may be legitimate. Now, you have three different financial services firms that are in play. You have the bank, you have the trust and corporate services provider that incorporated the company, and they've bought that boat, so you have a marine dealer, but you could also have an insurance company involved because, hey, they want to insure that boat and it's worth about $1 million. Hey, you know, I want to mitigate against the risk of something going wrong with that boat, that it could be replaced. And so each one of those institutions, and so now we have four, need to carry out some sort of risk assessment that they may be being used for money laundering purposes. And what do you have to look at? You have to look at the individual, you have to look at the geographic risk, you have to look at the delivery mechanism or the transaction, and you have to look at the product or the service that you're offering in relation to that person or that thing. So for the company, The company, what's the purpose of this company being incorporated? Well, they've just bought a boat. I don't know who's done the due diligence on the source of funds. It should be the marine salespeople, the person that sold the boat. Do your source of funds. Did this come from legitimate sources? They've insured it. You are the insurer. Have you done your due diligence? Or are you relying on somebody else to do the due diligence for that source of funds? Interesting question. But these are real life issues that happen. They've incorporated the company. What is the company being used for? Well, given the state of global affairs, and there's not much in the way of travel, day sales and overnight trips, charter trips within the proximity of whichever country you're in are pretty popular. So it could be that they've incorporated the company to get a trade license to offer day sales and other excursions on the water. That's legitimate. So as a service provider, what do you get? Do you get a business plan? Do you get information in relation to the vessel? Is the vessel certified? Is it registered? Has it been checked by the equivalent of Coast Guard to make sure that it's safe for the water and that there's not undue risk? Does the company own the boat? Now, this might seem like a far-fetched thing because the company was established for charters and excursions, but would the ownership of the boat through the company be an issue? Questions that need answers. And in some cases, that's pretty legitimate. And then we have the bank. What is the bank account for? Is it for payment for those day excursions, or is it for that individual's personal activities and then monies from the business actually bleeds in there? Or is it that they're laundering money because they've made massive drug sales and they're using the boat to smuggle drugs, and we need to get that money into legitimate financial services systems, so we get the boat and we get all of these things to make it seem legitimate. All of these things have risks, and so there is a very real risk of money laundering. And this is my case study. This is based on no real events. And it could be a real event, but I don't know, so I'm fictionalizing. This is not a real event. And you have this person carrying on these activities. You have 4 different entities, all of which have amlcft responsibilities. And in those amlcft responsibilities, they have to look at the risk of their business being used for money laundering or terrorist financing. And the way in which each of those would be used is different. The bank has different concerns from the trust and corporate services provider, has different concerns from the insurer, and has different concerns from the marine dealer that sold the boat. But all of them need to be carrying out a risk assessment in relation to whether they are being used for money laundering or terrorist financing. Now, let's carry the case a bit further. The boat is burnt to a crisp. Fiberglass burns pretty easily. Is that insurance fraud? Have you checked as an insurer to see the possibility of insurance fraud? Have you indemnified against that? I mean, these are questions, again, that need answers. And again, did your risk assessment for this particular business contemplate these things? For the trust and corporate services provider, are you checking to make sure that the business is operating as was disclosed to you, or is it a front for something else? And the banker, is this bank account actually being used to launder proceeds from whether drug smuggling or human trafficking? These are real concerns, legitimate concerns. And so you have to carry out risk assessments in relation to, remember, your customer, the product, the geographic risk, and the transactions or the delivery channels. And that is just the basic on risk assessment. It gets a bit more technical, but for the purposes of this video, I'll end it here. If you found this helpful, and I've not really done a case study on my channel before, if you found that helpful, let me know if I should do more case studies in terms of applied compliance, because that could be another series. I find from my experience that people are very much seized on what is on paper and the FATF recommendations, but when it comes to applying these things in real life, a lot of people sometimes run into trouble. Part of the reason why I have a course on CDD, because there's a lot that's going on. But let me know. Thumbs up if you liked it. If you found value in it, share it with some friends. Sharing is caring. Make sure you subscribe if you haven't, and hit the notification bell so you can get a video whenever it's dropped. And I'll end it here, and I'll continue another bit for the basics. So I'll see you on that one.